Welcome back. More now to the breaking news of the morning. General Electric has cut its dividend by 50% to 12 cents a share. The company says it did not make this decision lightly. The new dividend is now 12 cents a share per outstanding share, half of that, the current 24 cents. Joining us right now by telephone is Brian Langenberg of Langenberg and Company. And Brian, you are upgrading GE this morning on the heels of this news.
Yes. Basically, there were no expectations in the stock. We've had it go from 28 to 20 in the last few months. Half of that was the blow-up of the power segment. The other half I would call a cathartic experience by a lot of analysts who had a buy rating on it or were recommending it for a long time. There are no expectations at this point. And when I look at the valuation of the assets on a normalized earnings power basis, the fair value of the stock, even with the current problems, is at least 22 and probably closer to $25.
Do you like the tack that the company seems to be taking to really just focus on three main industries, aerospace, healthcare, and power?
It makes sense. And by and large, those were the bulk of the company already. So it does make sense to have greater focus. And also the history of Trian is that they go in with companies and say, look, focus. So it fits.
Hey, Brian, it's Mike Murphy here. If you see an upside on GE 21 to 25, aren't there a lot better places that people watching at home could place their money as far as seeing growth in the industrial space rather than trying to find the bottom here in General Electric?
It's a great question, and there's the absolute question, and then there's the relative question. Frankly, when you look at the market and you look at the broader industrial sector, there isn't much left. You know, in the market in the last year, we went from I'm with her to him with a question mark to MAGA to let's all pay up for a tax cut that hasn't happened yet. So really, we don't have many other names that we're recommending beyond United Technologies and Amatec and Eaton.
So, Brian, you, as we've seen, Honeywell has completely left GE in the dust, especially on the aviation side. Siemens has been killing it on the power side. They're up 7% over a one-year basis. They're trading at 15 times earnings. They've got over 3% dividend yield. Where do you think that GE goes from here in regards to competing against those? I see it as dead money. So where do you think the company can go from here? Are they going to do mergers and acquisitions in those space to generate the growth that they need to hit your price targets?
No, two things. First of all, I am very glad you brought up Honeywell. The fair value of these assets, the mistake a lot of people have made is say, let's take current results and extrapolate into the future. Well, the reality is you should look at the normalized earnings part of the asset. Now, I'm glad you brought up Honeywell because what made Honeywell probably the best or one of the best performing stocks over a long time, and a great turnaround story was when Dave Cote, who was not considered one of the fair-haired children at General Electric, went to Honeywell. The best thing John Flannery could do is go look at what Dave Cote did when he got to Honeywell, and they stopped basically changing their story every 90 days, and they just focused on doing a few things well.
Wow. Yeah, that's interesting.
If they do that, that will be John Flannery's path to real success.
Yeah, and that's
hope they do it.
That's why Honeywell's up 25% this year. You're seeing Dan Loeb and other activists actually being passive in Honeywell and actually just investing in the company because they're operating on all cylinders, and it's because of their management.
Yeah, Dave Cote's done an incredible job. He's been on this program. He's a real leader. Let me ask you this, because you've got the Investor Day today, and John Flannery, the new CEO, has made a pledge to sell $20 billion, additional $20 billion in assets. Part of that pledge is expected to be the transportation unit, which makes locomotives. What's your take on that and what this company looks like going forward? And also, how many jobs will be affected? GE had 295,000 employees at the end of 2016. What kind of a layoff situation are we talking about here?
Right. I don't know that you're going to have a massive number of bodies going out the door, really. I mean, when you sell a business, GE is employing fewer people, but they simply went with the business somewhere else. They've already been doing this for the last couple of years, trying to cut out layers of SG&A, systems, overlapping, processes. I think when you see announcements like this, part of it is something new. usually a big part of it is stuff they were already doing.
Oh, okay. Well, we'll be watching that. Of course, we are also expecting that there's going to be news in terms of exiting the Baker Hughes stake as well. They own 63% of Baker Hughes. Brian, good to talk to you. Thanks so much.
Thank you.
Brian
Bye-bye.
Langenberg joining us there, who upgraded General Electric shares this morning on the heels of this news that they cut the dividend by 50%.